Well, good evening, all. Ira Epstein on Dead Cat Bounce Day. Yes, I hate that term, by the way, but I'll explain why. It is Tuesday evening, April 8th, 2025, about 6:40 p.m. The reason I hate it is I'm a guy that has outdoor cats, indoor cats. My wife and I love them. And I have one kitty that's with me literally all day long. And, I hate the term. But what it means is you get a move down. And the market gives a bounce and then it falls again, all right? And that's because there was no life in it as it came up. That's the theory. Some jerk made the term up. In any case, would you like it to be a dead dog bounce? I don't think so. Dead whatever. Nah. But it's the term somebody came up with that obviously didn't like cats. But that's what you had. But what did you expect? You've already done the move of buy the rumor, sell the fact. After that, tonight at 12:01, actually in the morning, for Wednesday at 12:01 a.m. or thereabouts, the tariffs will go into play. The president today said they're already collecting on the 10%, $2 billion a day. God knows what they're going to take in on this, but how much do they slow the world economies down? I think it's important that you keep listening to the different people that come out. The word is the president is taking the calls. They have approximately 70 countries, according to the president, making the calls in, setting appointments up, and they're ready to do deals. That doesn't sound to me like you're 6 months down the road to get this done. The key will be the first country they do a deal with. If it's a big trading partner, I'm not interested. Don't take this wrong. I'm not interested in Israel, which is a small trading partner. Europe, give us a big one that could be there. Japan, South Korea is pretty good. Mexico, Canada, give us those. There's two countries that want to fight with the U.S., Canada and China. Others are either not saying very much or they want to make a deal. And that's pretty much how I'd expect it to go. This president's legacy is staring him in the face. Is he going to break what was a pretty good economy, put us into a recession, put millions of people out of work, change lifestyles, or was he willing to take a gamble, which he did, obviously, to break the tariff juggernaut, to make, I'm not going to say America great, because that's not what it's about. It ends up being that way if he's right. It's about making the playing field better. I do not for 1 second believe that you can get a trade surplus, we being the U.S., a trade surplus with every single one of our trading partners. I do believe that you're going to keep that 10% tariff on for a while. It's not going away right away. I do believe that each deal the president will make now could be either the tariff's going to be sliced in half, a quarter, or eliminated, the reciprocal part of it. That I do believe. And I think it will happen faster rather than slower. That does not mean it's going to happen on Friday, all right? If you listen to Scott Bessent, I think he's rational and he's saying it's going to take days or weeks. He's not saying months. He's not saying years. Days or weeks to me means you get your first good deal done and all the other deals start falling in place and you can say, no, hey, we got this. This is what we're demanding. Do you want this deal or not? But you got to make a deal to get rid of it in order to entice the others to come to you besides just the threat. Can't just keep going, oh, well, you're losing the biggest market in the world with the United States. China's going to be pushed off because there's just so much problem, and they're the second largest economy in the world. And very frankly, this is a battle of very large egos and strongholds between the two leading men. That's my take on where we're at. As for the marketplace tonight, you're down hard, but you're not still under yesterday's lows. I'll show you that in a minute. Gold's not getting a bid, and even more interesting is how much lower they keep taking the bond market. You're unchanged in all other parts of the curve yield, basically. Why is that down so much? If you know, write me the answer, because I don't know. I tried to read about it today, figure it out. People are saying it could be China selling off some U.S. Treasuries, and if they're selling them, they might have to offer higher yields, which would make sense. But why would China be buying the 30 years? I mean, I can see them selling the long term. Who wants to buy the 30? But maybe there's people out there that they can do it with. The currency markets are going to be all over the board. Everybody's going to wonder, what about my currency? What happens? My favorite market to trade are currencies. I haven't put a trade out in them, gotten anything done in weeks. I feel good about that, not bad. Right after these tariffs tonight, for me, the game changes. Now I start trading the reactions to reality, and I think I've laid out a game plan that we'll all be looking to see, will it work? When you look at the weekly close of stocks, it's hard to believe how much this has dropped in a straight line. But here you are for the week, and you're down another 3%. Last week you were down, let's see if I can get this. Oh, that's not going to be able to do it. I see what I did, and I know why. You're down roughly, as you know, knocking on the door of this 20% area, but you haven't taken out the lows of Monday. I would like it to, and I'd like it to fail. In other words, come down and come snapping back. That would do the job of traders trying to think, the market has digested this move from way up here, because that's where you got to look, not here, from way up here, the 6,200 level. We're already down knocking on the 4,800 level. I've seen projections. We can go to 3,700 if you had a almost 40% correction in the market. You could, but that takes a full recession. We're not there. We're flirting with the idea, are we going there? As you can see, you've had lower highs, lower lows. The market fought its battle, and for those of you that don't believe in this 18-day average theory I have, that when you're under it, your bias is down, when you're above it, your bias is up, shame on you, because it really keeps you from doing, in essence, the wrong things as a filter. When you're under it, I have a bearish posture. I know that you're trying to buy the markets here. I'm not. The market is saying the overall posture is down. It's got to do other things. Then we look at Bollinger Bands, real important, because what happens is markets like to get under them, and as I told you, push back to them. We talked about that yesterday, and now it's back to riding the band. You're not embedded. You're oversold. You've done this before where you get down to these numbers and it looks like the world's going to cave in, and you get that. We have a little difference now because at 12:01, the cave-in happens. But is it a thud, or is it just the doors go crashing and you wake up in the morning, you're 4,200? I'm not saying that you're going to be there, but I don't know. All right. Here's all I know. The market's in a downtrend. And the last low is right here on Monday. Can the market go for it? I'd like it to go for it. I'd like it to fail there and start building a tradable pattern, but we're not at that point yet. By the way, if you get over, in my opinion, today's highs, any of the stock indices, until you then come back and take out whatever tonight's low is. So I'm talking Tuesday highs, whatever the Wednesday lows are, you get over that, that could be a snapback for you that's going to be very painful. It's also very far away, as you can see, but I'm just giving you as a chartist the things that I'd be looking at. None of the stock indices are embedded. All did that Scooby-Dooby-Doo. It got back up, challenged the Bollinger Bands, and they're running them again. Now, I don't know how many days in a row we're going to have under the Bollinger Bands. Normally, you don't go beyond 5. I've seen up to 9, but normally not beyond 5. We have an event in front of us, so I'm just there saying, I have no idea how low is, nor do I care. I care that the trend is down. You're hitting some support areas, like even in the DAX. That doesn't mean that you're going to stop. As soon as you got under that average and you started playing at the Bollinger Band and started falling apart, game over, all right? Why would you still be long? I don't know, but I can't imagine it. Now, in the 10-year notes, I want no part of the short side right here. You don't have a bear signal. You have a market that peaked out, came down, and like the gold market and other safe havens, the dollar, all the safe havens have failed. going into 1201 tonight, including Treasury instruments. I showed you the 30-year, but you're doing much better in the 2-year, because if the Fed comes in the rescue, which part of the curve yield gets affected? The 2, the 6-month, the 3-month, not the 10, not the 30. Got it? That's different altogether. And we'll see where we go with that. In the dollar index, there's nothing bullish here yet. You have to close back over 103.37 to get a bullish posture in the market again. Now you've got the 200-day average right here. But the bears are in control until that happens. So I'm just going to view the market that way and say the near-term support's 102.18. If you crack that by very much, maybe we drop even back to where you were the other day here. Momentum-wise, you're getting no edge in the market. It's just going sideways, but the trend is down. In the euro, the trend is up. It's the opposite. And until the market can close back underneath 109.22, the bulls have control of the market. The support, even if that gave way, it's the flip-flop of the dollar, is 108.44. If you're a buyer on breaks even to the 18-day average, because I was looking at it really hard last night and this morning, I don't like where the risk is under that low. It's too much money to risk. And at the end of the day, you can be right the market, and all you're waiting for is one of those trades where you decide how right you are, and the risk gets out of control and you break your account in futures. It's very different in futures than it is in ETFs and stocks. Very different. And the ideal thing is you don't want all that 90% leverage. Sometimes it's the enemy. If you're right the market, God help you then. You're doing great. In the British pound, look at how fast this all came apart at the 132 level. You're back to 127.50, void of a trend. You have a higher high and lower low, and the battleground has become the 200-day average, this gray line in the Bollinger Band, void of a trend. Everyone's going like this. All right, what's the reaction in the market going to be? What's going to happen? But my instincts are, this phase is ending at 1201. You're into it, and the next phase is deal making. That's a big positive as soon as it gets underway in a real serious manner. And the first deal that comes, everybody's attitude will change. Got to make that first deal, and I don't know which country will be the first. Bitcoin, certainly falling apart, riding the Bollinger Band lower, oversold, but not a storage of value. This is an asset no different than stocks now and other things you own. Gold proved itself to be a storage asset and one that responds to these shocks. Bitcoin, in my opinion, did not. In the energy markets, well, they're just going to come apart here, all right? If the U.S. sneezes into a recession, what happens to everybody else? And so this market's building in a worst case. You're already in Brent. You've just come from $74 down here. I have a question. OPEC saw this all happening, all their people. I was amazed. Remember I said this, that they're going to increase the production. Saying they're even going to do that is you're going into this event. I don't understand the timing of that. WTI just falling apart. And the administration has not said a word that they're going to buy any reserve oil back yet. So you can't look for that the way that the Biden administration was doing it. So right now you don't hear me saying, like I used to say about Joe, he promised he would buy oil and then he didn't. And I'd always go, lying Joe, but he turned out to be a pretty good trader. He took the oil out, got money in at a high price. But now the question is, who's going to buy it back at whatever a good price is? But you're down hard. Here you are. You're back to $57.50 a barrel. Now, what will not happen at $57.50 a barrel is U.S. production picking up dramatically with new money, committing to new wells and all that. Ain't going to happen. What has to happen is either the cost of all that comes down dramatically or this price has to go back up. The room in this set of numbers right now is not there, in my opinion. Rebob gasoline, I'm smacking here. I'm looking for a signal when it comes. I want you to be buying this market It's not time. Wait, I have been the bull for the spring, summer driving. It's still only April 8th. But if you get to the end of April and you haven't rallied, then I've got a bigger problem. I don't think that'll be the case. I think this market's going to search soon for a bottom. Am I a bottom picker? No chance. Got that? No chance. Natural gas falling with every other energy. Remember we were up here, and you and I were doing this? Go back, you'll see it in March. And I said, I'm telling you, I think the pros are coming out. Again, every time you've hit that Bollinger Band, you've quickly retreated. Well, now the question is what happens down here. My guess is between where you're at, which is the 100-day average, which you finally hit, and the 200 and the Bollinger Band, it's that zone that I'm going to look for the market to make its low. From where you're at right now, you're at 348. That's around 320. So that's a window that I'm looking at. Am I saying put in buy orders to my clients? I'm not. I'm telling you as a chartist what I'm looking at. So you put it together, you come up with a game plan, and away we run with it. Tomorrow we're going to be writing like mad about what this all means, the impact of the market. So if you don't get my letter and you don't get the Linn letter or our pivot point charts, or we call them price counts, and other offers, this is a good time for you to look at it. But don't keep coming back and saying, I'm going to go for another one of those free offers. We really monitor what we do. And that's, as soon as we find you, we'll blacklist it with your IP address. So you don't want to do that because you want to still be able to get on what we're doing here and see the videos and so on. But if you haven't tried it, try it. This is the time you want to do it. Options trading, spread trading, cash trading, and futures, all there. And then my stuff I'm writing on and doing the videos on spiders, ETFs, and the futures markets. So you get a little bit of everything. IraEpstein.com, free offers. I'm giving you a smile. Get a good night's sleep, buckle in, and maybe don't have some breakfast. First look at the markets and we'll have an idea where we're at. Anything can happen, folks. I'm Ira. Have a good night.